quick. I don't even feel like doing it again because it deleted, but fuck it. When you open trading view, let's type it in again. Trading view is if you need to look at the charts. Trading view, right? Hit a pair. I'm going to mark up GBP USD just because the price action is good. Full chart with the thing with the full size screen. That's how you put up the chart. Boom, bow, bada, bow, boom. I already marked this one up and all that, but I'm gonna just explain it or whatever the fuck. All right, top down analysis. Start on your month. When I'm on my month, on your time frame, your month, week, and day. This is all you need. You don't need none of this shit down here. Month, week, day. On my month, week, and day, that's my higher time frame. I just want to know what direction the market is going. The market only goes 3 ways: up, making higher lows, higher highs, higher lows, higher highs, etc. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. This will be a bearish market. That means the market is going down in price. If the price is going up, that's a bullish market. Price is moving up. And then there's also consolidation, which is this sideways movement. The market goes up, down, sideways. That's the only 3 things the market is going to do. That's what I want to figure out on my month. Where's the market going? Right now we look bearish. Okay. As of now, we are still bearish. I will now go to my week. Now I'm on my week. I'm going to make this a little bigger. Now I'm on my weekly. We are still bearish. I can see that we did not break above these highs over here to the left. You look at the market to the left, you just want to figure out where price is going, and you're just getting a small portion of that if you predict it correctly. But it's not just a predicting, you put it in, you need to analyze it so the prediction can be correct, because there's an actual end goal. It's not fucking gambling. Look at the fucking reading. Alright, so I'm bearish. I wasn't able to break above these highs, but down here we do seem to have higher lows and higher highs reaching up to this point. So we may be slightly or internally, we may be internally bullish on the lower time frame. But as of now, this is still giving me the indication, and this is, we swept liquidity. That's where this big move came from here. Boom. Came down, swept liquidity. If you don't know what it is, look it up. It's been a long ass time. You should know that by now. I'm gonna go down to my day. Now on my daily, each candlestick, again, you should already notice each candlestick is the time frame that you are on. If I'm on my 1 day time frame, each candlestick is a day's worth of time. So all the way back here, you don't even need to be looking at all this shit, especially if you're on a higher time frame. Mind you, this shit says 2023 at the bottom. You got your price here to your right, time on the bottom. You don't need to be looking at shit from 2024 because the time is now, nigga. It's not that. No, you want to know where price is going now. Something over here wouldn't help you, right? Maybe here would be an exception because this is something unmitigated, which means it's untouched and all this other shit. And like lows like this. But if it's something in the lows right here, the lows like in this area, some shit were already mitigated. This shit already been ran through. You can't do nothing with that. So you don't need to look too far to the left, but look over enough. Alright, I'm on my day. I'm gonna zoom in to these candlesticks throughout this past week. Alright, I'm looking for the move right now. I also see a liquidity sweep that just happened right here. We just swept liquidity on this side, so we just swept all of this, came down. That's where we get this small pullback. I'm looking now. We have a liquidity sweep right here. We have a sell side liquidity right here of these highs. Swept that. We push back down. We also have an imbalance right in between here. Market did just open. It looked like we pushing back up right there. So I'm gonna mark that. It looks like price is going to get that imbalance. Imbalance is just a gap in price. The market always wants to fill orders, and that would be considered an order because it's a gap in price, so the market needs that. So that also gives you another what's the fucking word I'm looking for? I gotta think about this. I'm gonna be mad with that. Another confluence. It gives you another confluence on where you think price will go. Bettering your trade, right? All right, I'm on my day. We're gonna go down to the 4 hour. On the 4 hour, oh yeah, on the daily, I realized we had a fair value gap right here. I'm gonna mark it up again. 1, 2, 3. 3 candlestick continuation. There's a gap in between. The big parts of the candle is the body. The skinny part is called the wick. That's just where it retraced that where it was before. This candle right here went up, came back down. This is where it closed, and it opened right here on this next candle. Came up, closed. Since this is a bearish candle, it opened here at the top, closed at the bottom, continue to push down. Right here, I'm gonna take my box from the wick of the first candle to the wick of the third candle. That's how you mark up your fair value gap. That's my 1 day fair value gap. That for me is going to be a target that I want price to reach, just because it's on a higher time frame, and these candles did not close above these candles over here to the left. So that therefore is saying to me that we did not change character yet, so we are still bearish. If these candles right here, or even if this does come up, if they come above and close above, all right, then that's a change of character. We might be shifting in the market from bearish to bullish. But as of now, I still want to be bearish. That's my bias. Then we have these large retracements on the day. So prices up here throughout the day, yesterday, and came all the way back down and closed below these lows as well. And then it's too close to these lows. When the lows are sitting picture perfect like this, it's called liquidity. Price needs liquidity to move. If you're going down, then you got to go up. And if you got to go up, then you got to go down. The market goes back and forth. It doesn't go in a straight line. It makes the higher highs and higher lows. So you don't need to be scared thinking, oh, I'm not buying no more just because it went down. No, it just needed to pull back, grab the fucking energy boost to move back up, right? All right, I'm on my 4 hour. Now, this is internal just from the higher time frame, but we still have up top, you got your time frames, still have more internal structure to go. But right here, I'm seeing that we did sweep. I'm looking at this line on my axis, and I'm looking at this wick. This wick did sweep these highs here, so we may push back down a little lower. That's why my bias was bearish. I already marked that out, but all these areas when these picture perfect lows is the reason that I switched from. Well, no, we was always bearish, but it looked like we were gaining bullish momentum to come back up because we saw liquidity. Then we had these strong pushes. It did close right here, and we got to close and did sweep all of this liquidity in this area. And we did close above this gap right here, this large 4 hour gap. But I mean, it wasn't that strong to me. If it was stronger, I'd say bullish, but we're not quite there yet. And it's liquidity sitting right here, so we're just going to continue with the trend. If you obviously see that shit is going up, there's no reason for you to be selling. There's no reason for you to be selling. All right, now I'm going to go to my 1 hour. On my 1 hour, I'm looking at price, where price is now. Price is moving. The market did just open back up at 6 o'clock. We retraced from this 1 hour fair value gap. 1, 2, 3. First wick, then the last wick of the third candle. That's why I marked that box. These wicks coming into this zone is called inducement. Inducement is it's hitting the zone, but the candle, the body of the candle itself is not on this zone. So I believe it's gonna come back, reach this zone. Then you also got the liquidity underneath as well, and we are making lower highs and lower lows right in this area. Lower highs and lower lows, lower highs and lower lows, and we're right here now. So that does not look bullish. So you shouldn't be saying bullish because we're making lower highs, lower lows. You need to learn price action. That's the easiest part of all this shit. I swear it's not hard. The hardest part is you. This shit is not the hard part. I kid you not. Stop being a lazy hoe. Well, I mean, for real, I can't tell you nothing, nigga. If you don't want no money, you don't want no money. I mean, the shit right here, niggas be talking about going to work. Fuck all that. Anyways. We also have lows up here that could be swept. So this may be pushing up to get swept. That's why I had this here. I wanted to see price retrace to this area. And it kind of did. I just didn't get in. Sweep these lows. It's the sell side liquidity, so it can push back down. It's getting energy. Buy side liquidity will be on the bottom. Price we need to, this for instance right here. Boom. Great example. This is an order block. This is my order block. I have an order block here. I'm not going to explain that right now because I don't want to confuse nobody. Look it up, and it respected the order block too and push back up. Bruh, how the fuck do I? Oh, boom. Order block. got the order block from, well, if you was curious, I don't know about to go into it. This last bullish candle before this strong bearish, I said that backwards. This last bearish candle before the strong bullish movement. The wick, top of the wick, that's why I drew out. And then price retraced back to it, respected it, pushed back up. So, not gonna lie, that do change a lot too, and it's on the 1 hour, so it is a strong bearish FVG. I'm at bearish order block, but my TP is still down here, even though we got these gaps down here. If it comes and breaks through, oh well, but I think it would, just because we got picture perfect lows right here at the bottom. 45 minute. Same thing, we got this strong push, so it did change character right here though. Now we're coming internally. Now internally changed character. It swept these highs, and you had a candle close above here, a strong bullish candle as well. Liquidity sweep, swept liquidity up here with these highs, picture perfect highs. There and there, it's gonna look better on the lower time frame. Came down, swept liquidity. No, it didn't for real. Came down into that 1 hour fair value. You got inducement, and then exactly close on that 50% or whatever else to tap into it one time for real on a higher time frame. But remember, top down analysis, the higher time frame means some more. On my 30-minute now, see how this liquidity was up here too. Sell side liquidity came up, then came down, and if it was buy side liquidity, it would look something like this candle right here, this black candle right here. It's the bearish candle. Came, swept liquidity, all these lows right here. It came, swept this shit. 50% of this fair value gap right here that I did mark up. That every time you see a long, like a big bearish or bullish candle, there's something inside of there. There's liquidity inside of there. 50% is like the perfect number in the trading shit. 50%, just think 50%. Came 50%, fucking took off, right? Boom. It's not hard. You just never seen it before, so it's confusing. And nigga, stop saying you can't do nothing, right? 15 minute. No gaps up here for real. What it is, liquidity, inducement. We still got nothing right there, so I think it may sweep, then drop back down. If not, I don't know where the fuck is. If something happen, because again, what's today? Tuesday. Alright, well, there's no more news for today. That shit over, but you need to look at your news too, because economical shit does affect the market. And then this will still be my bias. That's top-down analysis.